Hello, welcome. So I'm doing this video because um, this Thursday is Tesla's Q4 earnings call, and at the same time, on the same day, the FOMC is meeting and giving a statement to the Congress, and the market is really, there's really a lot of market fears that the FOMC is going to once again crash the market. I'm really going to I will try my best to do this investigation for myself and also for the Tesla shareholders out there to ask the question, will the Fed tightening crush Tesla price in 2022? Now, we know that the year started very well for Tesla when Q4 deliveries was announced on the 2nd of 2022, 2nd of January. Price spike up all the way to about 1,200 again. But as soon as the FOMC statement, which was released on the 4th of January, just 2 days after, it was very hawkish. It sounded more hawkish than ever. The most hawkish ever FOMC statement in the last couple of years. And the Tesla share price started crumbling, and so is the rest of the market. So S&P 500, Nasdaq has been going down for the last 2 weeks, ever since the 4th of January, and in anticipation of this coming FOMC meeting and powers address to the Congress, the stock market has really been crashing in the last 1 week, especially the last 2 days before this weekend. So let's look at some history here and see how the stock market has been responding when the Fed increased rate in the last couple of years. All right, so in this chart here, we see the Fed funds effective rate over a period of time, and I deliberately zoom in from January 2015. In fact, I would like to zoom in a bit earlier. So we have 2014. This was when the Fed funds rate has remained about 0.09%, 0.09, which is actually exactly where we are right now, right? Exactly where we are right now. But the Fed started increasing rates, right, towards end of in the last quarter of 2015, and it steadily increased it, right, over the next 4 years up to its peak 2.4% in February 2019. Okay, and of course we know what happened after that, especially the pandemic, causing the rates to go all the way down to where we are right now, and it's been remain at that level since April 2020, the last 2 years. Okay, so the first question is, how did the stock market do in this 4 years? All right, let's look at Nasdaq. I don't have S&P 500 here. Basically, it's in the same direction, but we're looking at Nasdaq because Nasdaq is hammered more heavily than the S&P, because Nasdaq is more focused on the technology sector and more growth stocks. Okay, growth. So the big question is, especially for growth investors, because we know that the PE, the valuation for growth stocks are generally higher than value stocks, because we are expecting more growth because of the higher growth expectations. The market is willing to pay a higher PE valuation, and especially for Nasdaq. Many of Nasdaq stocks are in this category, growth stocks. So we want to look especially at Nasdaq and us. So the question is, what happened to Nasdaq from the last quarter of 2014 onwards? You know, if we zoom in, yeah, we can see what happened. It's actually the stock market continued to grow, isn't it? Yeah. Of course, there will be some correction here and there, okay? But it's been basically growing, right? And this is a monthly chart. This is a monthly chart. So yeah, all the way up to the pandemic, then we have 2 months of major correction here, as we all know. But ever since, okay, so it's been on the rise. So the conclusion, what happened? If we look back to 2015 to 2019, the last these 4 years, the stock market continued to rise, right? Continue to rise. So the question we ask now is that for this upcoming, the upcoming rounds of Fed funds rate increase, are we going to continue to see the stock market to move higher? Right? That's the big question mark. That's $1 million question. Okay. Now, other than Nasdaq, we also, I just want to also look at, for example, one of the, not a FANG stock, but I think it has all the characteristics of a FANG, and it's now the second largest market cap in the world. So Microsoft has been, been around for a long time, before even the FANG stocks. Yeah, we can also see that, in fact, from 2014 towards 2015, yeah, maybe this dip here is because the Fed started increasing the Fed funds rate. Okay, but soon after, the market, the Fed, Microsoft had been going higher and higher. In fact, if we look at from 2015 to it was doing as low as 40 to at its peak, it has already 3 times, more than 3 times, more than 3x. Okay, so isn't that good news? But still, yeah, we want to investigate deeper. Okay, is this going to happen to Tesla? Right, that's the ultimate question. Okay, so if we look at Microsoft, okay, if we look at the, let me zoom into the maximum that we can investigate here. I'm looking at Microsoft. I'm looking at Microsoft MSFT PE history from all the way from 2000 to now, right now. Okay, so okay, first we see PE was actually declining, right, from before 2000 all the way down to the lowest is around 2009 to, of course, we have the US subprime crisis during this time. Okay, so that may be the reason. Okay, but it has been steadily increasing also. Okay, even before the US subprime crisis, you can see that Microsoft is being on the way down. Okay, has been on the way down, and so why does PE ratio decrease or increase? Now, generally, when a stock PE is declining, it basically means that investors are expecting the company to grow at a slower rate. And if PE is increasing, it also could mean that investors are expecting the business to be growing at a faster rate or at a higher rate. Of course, there is another interpretation, and the other interpretation is because due to the increase in money supply, there's more funds flowing into the market, and therefore this is actually causing the market valuation to rise as a result of the increase in money supply, right? So kind of like asset inflation, which we actually don't want, and so the question, and why, so well, if PE increase because of asset inflation, because of increase in money supply, likewise, when money supply is tightening, or when interest rate is tightening, then the share price will also, the PE ratio will also fall, and likewise the share price will also fall. That's our worry, isn't it? That is what we are, what investors are worried. But is that true? Is that true? All right, is that true? Is that what we're seeing in the market right now? Okay, let's examine, let's investigate. So now, so I believe what we are seeing here, all right, is that the Microsoft, because Microsoft is a mature business, and during this period of time, the total addressable market, it has been, you know, like we know that Microsoft Office and all that, the market share, basically Microsoft has dominated the entire market, and basically the total addressable market for Microsoft basically has been mostly realized, or rather the future or the potential new total addressable market, the potentially new TAM that Microsoft has during this period of time, in fact, is decreasing, and that is the reason why PE is decreasing, right? But as Microsoft began to increase its various market segments, revenue sources, like for example, it start to go big into cloud computing, and start to be successful and start to show results, we can see that this PE is actually, this increase in PE is actually driven by increase in net income, not because of increase in money supply. All right. So I want to prove it to you here. You can see here that yeah, Microsoft earnings has been increasing. All right. This is Microsoft net income. All right. And let's look at the last 10 years. Yeah. In fact, it has been growing, right? It's been growing. Okay. And if we look at the maximum here, yeah. So I would say that especially if we look at the last 3 years, all right, we can see here that before the pandemic, the market crash here, right? Remember, February, March 2020, market crash, and likewise, Microsoft price also plunged, and we can also see a short-term PE compression here, right? But we can see that because Microsoft net income has actually spiked up, okay, during the pandemic, and after that spike up. That's why its PE actually grow from the average of below 30 to 35 and above, right, over this period of time. So the question is, did Microsoft PE increase because of increase in money supply? I don't think so, because we can see that actually Microsoft net income also spiked higher. So Microsoft PE did not increase because of the increase in money supply. That's very important. I think that's my conclusion. And I can also, we can also look at Google, because Google business model hasn't changed much in the last couple of years. And if we are to look at Google's PE ratio over the last 3 years, basically it has been on a decline, right? It's been on the decline. Okay. So there is a spike up here. So, but basically it's back to pre-pandemic levels. You know, the pre-pandemic levels were around this area. So if we even zoom in to bigger, to 5 years, you know, yeah, Microsoft PE has been pretty stable, and in fact, it is now at almost one of the lowest point in its PE history. So here we have right now it's about 25, and if we look at the lowest level here is about 21. So it's basically stayed pretty constant. So in the last 1 year, all right, and this dip here because of the recent the fear on Fed tightening. So the question we ask, this you know, but despite this, Microsoft net income is steadily rising, especially, you know, after the pandemic. If you look at the 5-year history, or even if we zoom out to 10 years, Microsoft net income has been growing steadily. In fact, it really exploded after the pandemic, all right? But despite the increase in net income, all right, Google's PE did not spike higher. In fact, it came down. Okay, it came down. So does this justify that that there's a lot of asset inflation caused by increase in money supply? Yes or no? Doesn't look like it. This to me doesn't look like it for me. All right, when income is going higher, Google's PE is dropping. So how do we say that this is asset inflation? How do we say that this is caused by increase in money supply? You know, I don't think so. And the question we really have to ask is now, if we look at multi-year PE history, yeah, and if we are to discount before 2018, okay, discount before 2018, because I think something must have happened during this time, and most likely it's because Google is proving itself to be a monster in their space, right? But if you look at where Google is right now, it is almost okay. Now it's 26, and the lowest is was 22, 23. How low can Google go? Okay, that's the question. So I really think if we are to, by looking at both Microsoft and Google, they are at, kind of like a historic low right now. We shouldn't be looking at before this, because Google is a different animal right now, and also do you think that Google will see their growth start plunging after this? Big question mark. Okay, but if the market is anticipating that Google earnings will start decreasing and growth will start to slow down, decreasing, and if the market is correct, then yes, all right, then yes, we will see that Google's PE will continue to plunge, all right, yes. But if Google's earnings continue to increase, all right, unless Google stop growing at this pace, unless Google's net income stop growing at this current pace, right, which is very fast, okay, let's look at the last 3 years, all right, and this is the last 3 years, 152%. That's very fast, all right. And if you look at the last 1 year, it's been growing at this rate, 40%. Now, if Google's growth start to slow down to 30%, 20%, yes, then I think the market is right to price in a lower PE. All right, that is the question. Okay, let's hold on to that question, because we will ask the same question for Tesla. Do we expect Tesla growth to slow down in the next coming 1 year, in 2022? Do we expect Tesla growth to slow down in 2022? No, right? It's a big no. We know the Tesla growth will accelerate in 2022. Tesla, because Tesla's PE is not, growth is not going to slow down, we do not expect, and also because Tesla's total addressable market is still huge. There's still a lot of total addressable market left for Tesla to conquer, unlike the more mature growth companies like Google. So we do not, I don't think it makes sense for Tesla PE to like fall by like 20, 30, 40, 50%. I really don't see that. Okay, but okay, then let's investigate another stock here. A very how do I say, a value stock, not a growth stock for sure. Bank of America, right? Bank of America. And as we look at the last 5 years, basically it's in terms of growth rate, this is growth rate. Yeah, it's been more or less quite stable, with a bit of ups and downs, typical of a cyclical stock. Bank stock is somewhat like that. If we look at the You zoom out to a 10-year history, yeah, on by and large, it's still growing. Yeah, and the last 1 year, very good. It's been growing. Okay, it's value stock, and the PE is actually on the way down. All right, but if we zoom out to 3 years, 3 years, it's more or less constant. Okay, and right now it's about 12. Okay, so yeah, again, we do not see Bank of America's PE spiking higher because of so-called asset inflation, so-called because of the increase in money supply. So as we investigate the PE of value stock, both value stock as well as growth stock over these last 1 to 2 years, I really don't see that the PE is spiking higher because of the increase in so-called money supply. All right. So therefore, if the Fed is going to start so-called unwinding their balance sheet and there is a interest rate compression, yeah, maybe there's going to be some fears that spook the market in the short term, increasing short-term volatility. But in the over the next if we look beyond just 1 or 2 weeks, if we go like the next 1, 2 quarters, or even 3 or 4 quarters, I think the most likely we are going to see the same thing here of what happened to Nasdaq. All right, despite the increase in the interest rates from 2015, late 2014 to 2019, Nasdaq and the stock market on the whole, growth stocks, okay, still continue to grow. Okay, we're going to see this growth stock still continue to grow. This is what we can see so far. All right, and let's take a look at this final chart. Okay, where I compare Tesla with Microsoft, Coca-Cola, a value stock, and Google, and Berkshire, all right, the king of value stock, right? Now, over the last 1 year, okay, 1 year, all right. Now, let's look at this, okay? Now, Tesla, okay, if we look at 3 years, okay, Tesla grown a lot because it was only in 2019 or 20, I think it's 2019 that Tesla start showing free cash flow, generating free cash flow, and it start to show net earnings in 2022, and that's why Tesla PE spiked up in the year 2000. All right, and the PE went up very high because of this sudden realization that Tesla is a growing and very profitable business. All right, but when after a while, okay, as Tesla continue to grow, similar to most growth stock, just like any of the FANG stock, Tesla PE also start to fall. All right, you can see that in the last 1 year, Tesla PE has fallen. All right, price increased, but PE fall. Okay, now most important, let's look at since FOMC's hawkish statement on the 4th of January. Look at this. All right, Google fell by 9 points. Okay, PE ratio, Google fell 9%. Microsoft also fell by 9%. Okay. Even Coke, a value stock, also PE fell just by a little bit, but Berkshire instead increased a little bit. But look at what happened to Tesla. Tesla is holding its PE. It is holding its PE better than Microsoft and Google. It is not falling. All right. Well, of course, we know it has fallen from its high, but in terms of PE, it's holding. So that's very important, because if Tesla's PE is holding, okay, let's remove all this. Let's remove all this. If Tesla PE is holding at this, okay, just now was percentage, let's change to linear. If Tesla is able to hold up to this reason, I mean, expectedly this is still high, but if we look at the forward PE is much lower now. And if earnings increase, Okay, if earnings increase, we're going to see Tesla PE continue to fall, but yet the share price will increase. All right, just like what we see in Microsoft. Okay, lower lower PE, but the price will continue to. So I will give you one more example. All right, one more example. Let's look at Amazon. Okay. Amazon, if we look at Amazon's PE history, okay, can we see here Amazon PE? All right, yeah, it will fall. You see, it was very high here, 2000 over, then it fell. Okay, so you can see in the growing years, okay, PE will spike higher, but it will start to fall. Okay, it will start to fall. Okay, still very high here. You look at in 2015, still very high, 900 over. All right, but as it start to grow, all right, and show profits, PE will fall. Look at that, 3 years. Okay, 3 years. As a high of 132, but as it continue to grow, all right, in earnings, the PE will fall because it is realizing more and more of its growth, of its market share, is realizing more and more of its TAM. So therefore, you know, that inevitably the TAM will shrink, and as a result, the PE will fall. But despite that, earnings keep growing higher and higher. This is typically what we want to see in a growth stock. All right. Yeah, this is what we see. This is what we want to see in a growth stock, higher and higher, more and more net earnings, and we know that Amazon has been growing higher. So, okay, in conclusion, number one, all right, I don't see an asset inflation in the last 2 years, right? Because because PE has been falling for the large cap growth stocks, and despite price rising, okay, net earnings has been going higher, PE has been going lower. Okay, so we are at a very conservative PE now for all the large cap growth stock like the FANG stocks. All right, and the last question is, are we going to see a PE? Are the PE of this growth stock decreasing because they are maturing, because they are going to slow down, because because perhaps, okay, the question is perhaps this growth in the last 2 years is because of so-called stay home. Okay, everybody is forced to stay at home, therefore it benefits all the stay home stocks, and therefore the FANG stocks, okay, benefited as a result of that. But because we are now moving out of the so-called stay home period and we're moving into recovery after the pandemic, and therefore as a result, we are going to expect growth for Microsoft, Google, Amazon, all this to start slowing down, just like Netflix. Yeah, if the same thing, if Tesla growth is going to slow down, like what happened to Netflix, then yes, Tesla stock will be hammered. But no, right? No, we know that this year is going to be a big year for growth because Tesla, because Tesla, unlike the FANG stocks, okay, for some of these FANG stocks, like especially for Netflix, they are actually growing. They will be growing at a slower rate, but not true for Tesla. Tesla is going to keep growing, okay, more than 50% a year. So my conclusion is that there may be a short-term volatility, but I don't see Tesla stock falling below. I don't see Tesla falling below 800 because it will be supported by strong earnings. All right, but there is still a huge upside for Tesla stock this year. So I believe, okay, Tesla will not be crushed by the Fed tightening, will not be crushed by the increase in interest rates, but Tesla will ride this storm. It will ride this wave, and as it continues to expand its earnings, price will continue to rise. All right. Well, thank you for watching. And yeah, if you have any questions, please let me know. If you have if you have different thoughts, you think differently, please, let me know. I would really love to hear from you. But I hope that you have taken away some insights from this this short video. Yep. So yeah, till we talk again next time, and all the best to Tesla earnings. Okay. Yep. Let's keep our finger crossed. Hopefully, we are going to see a massive earnings beat this Thursday, and yeah, I believe that I believe stock will at least push higher to 1,100. Yeah, let's see what happens. I believe that we're going to do well. I believe we're going to do well in the next 1 to 2 quarters. Even in the short term, I don't think all this, especially with the release of this Q4 earnings, Tesla stock will recover from where we are right now. Okay, talk to you again. Thank you for tuning in.